Here's how I use the first 15 minutes of the New York session open to set my bias and catch massive high probability trades. And in the next few minutes, I'm going to teach you why this 15-minute range acts as a blueprint as to where price is going to go. This green horizontal line moving across my screen and this red horizontal line represent the high and the low of the first 15 minutes of the New York session open. All we are simply doing is waiting for a 5-minute candle body to close outside of the first 15-minute range. When we see this happen, we now have our temporary daily bias. So on the closure of this 5-minute candle body outside of the 15-minute range, we enter a short position. We're keeping things very simple. We're going to find the nearest fair value gap above us, and we're going to put our stop loss right above that. So you can see we're risking $558. Now, what makes this strategy a little different is that there is no take profit level. We are simply going to trail price and see how much we can squeeze out of it. And if you stay with me, you'll see why that is the key. That is what all the greats did. They trailed their winners. So here you can see I played out a few candles later and we are up $375, and I'm using the shelf method. That's what you see here. This method allows me to trail price. Instead of using hard take profit levels, which are just made up anyways, we use the shelf method to trail price, thus squeezing the maximum amount of value out of each trade. So from our initial entry, price moved down. It came back, it tested the shelf, came back down into consolidation. At that point, leg down, retested another shelf, and tested the bottom of our consolidation. Once we see price action retest a shelf, we're looking for the next leg down so that we can take our stop and move it to break even. At this point, we're looking for price to do it all over again. We want her to come back, retest the shelf, move down into the lower part of the consolidation range, and eventually create another leg down. Now, here's a pro tip if you're using the shelf method to trail. Once price retests a shelf, you are then good to take your stop loss and literally put it down into that shelf, because price action has no reason to retest a shelf. So let's play out the next candle and see what happens. No problem, our stop loss got hit and we walk away with a tiny W. Now, this was one of the most difficult days to trade, but I like it as an example because we still didn't lose. And I just want to show you what would have happened had you used this strategy, I don't know, over the past 5 days. Let's take a look. All right, we don't have a lot of time, but here's a 5-minute close outside of the 15-minute range. Starting 5 days ago, let's see what would have happened. So after backtesting for only 5 days, we have a $3,500 profit, 0 losses, and here's the best part. I put together a ton of backtesting examples with this strategy in detail, and if you want to learn it, all you have to do is type challenge in the comments, and I'll send you a link to join my school group absolutely for free.